So that's the Fed preview for now. Let's continue to the special focus of this week, the euro dollar. Euro dollar is the currency of the week. Why? It's stuck in range for a long time. I've been expressing my frustration. I'm not the only one. And I would say euro dollar is the new dollar yen. What do I mean? Dollar yen for extremely long periods has been stuck in narrow ranges and then had these crazy spikes. Okay. Since then, dollar yen is moving quite a bit up, down for over 2 years now, and usually after long periods of range trading, we have an explosion. When will this explosion come? I don't know, but I think it'll come relatively soon. We have a situation where the ECB, the European Central Bank, is still ready to add more stimulus. Even if it's not bombastic, they will continue their QE program. They will make it looser. And the Fed is still tightening. Again, it's not the same monetary policy convergence we've seen in 2015 when the ECB made its big announcements and the Fed eventually raised rates. Things are moving at a much slower pace now, but the direction is clear. Okay? And this speculation, this monetary policy divergence is different. I mean, it contrasts the fact that euro dollar is naturally bid. If you look at trade balance, the Eurozone has a surplus thanks to German exports, and the US has a deficit. So all things equal, all other things, if we don't have any other movements, if we don't have speculation, euro dollar should go up. But of course, speculation rules the world. And monetary policy divergence can return. The US dollar is also reasserting itself as a safe haven. This is especially true with the US elections. If Donald Trump has higher chances of getting elected, of course, safe haven, but the US dollar is second. The euro was a safe haven back in 2015, but that is gone. Okay, so also so it's monetary policy divergence and the safe haven roles. These, I think, outweigh the fact that euro dollar is natural bid. So my tendency is to see a fall in euro dollar to the downside. Of course, down but not out. I would say 108.20 and 107.10 are big targets. Parity seems a long way. Again, without pressure, with boring markets, euro dollar can rise. Let's look now at a few levels on euro dollar to also give some technical spice to what I'm talking about. So the immediate levels to watch on euro dollar are, well, 111.20. As you can see, it's a double bottom. If it does really go to the downside, the next significant line of support is 109.60. We've been there in the recent past. That's a line tackled a few times, but eventually the pair bounced. More to the downside, we have the post-Brexit low of 109.10. Further, the line I mentioned, 108.20, worked as support back in March when the ECB did a lot, but told us that they're stopping for now. Further support is at 107 back at the end of 2015, the previous ECB mess, and when the Fed raised rates. If we go even lower, it's 105.20 from December and 60, the 13-year low for the pair. To the upside, 113.17 is a line we've seen and works as resistance, followed by 114.30, the pre-Brexit high, and then 116.16, which was the high of 2016. Okay, so that's where I see euro dollar. I think it's ready to explode. My bias is to the downside. Let's see what happens. All right. And let's continue to the next segment, which is